Okay, great. Kenny, she has an alter ego because I see two accounts. Doesn't matter. Doesn't matter. Okay, guys. First of all, thank you very much for the opportunity to give a webinar for you guys. Thanks to Kenny Shi, and he's also involved working for Coinflex. It's a trading exchange, leverage trading exchange on Bitcoin, Ethereum, and some other alts, of course. But the main volume is on the Bitcoin. And so thanks very much, Kenny. For the guys who don't have an account yet on Coinflex, you can sign up with my referral link as well. And Butter Hank, John, are you all crypto traders? Or traders in general and also on different markets? I try. And are you successful actually? Or it's difficult? Beginner? Okay. Basically, we are trading, of course, the big trader, Butter. Mm-hmm. Peppa, welcome, welcome. Yeah, first of all, I would like to do a short introduction about Ichimoku Cloud Trading Indicator. Who knows Ichimoku Cloud? Because normally I trade on the charts on Coinflex. I will show you later on as well. However, chart reading and analyzing is one, but trading is a second one. And I would like to show you the bracket order trading as well. Ruud, welcome again on board. I will guide you for the next 30 minutes to the Ichimoku Cloud Indicator. Where to begin? Well, you can begin actually, if you see the presentation, to start somewhere. And the destination is the big bucks. I hope so, of course. Everyone hopes to make money. However, it's not that easy. And the educational journey of today begins with one step, this one. Yeah, the thing is that it's very important to align yourself with the market. And honestly speaking, I also did not do well recently in the market. Moves in the Bitcoin for $2,000 in one time. In a couple of hours also in the night was not good. But in general, everyone who is trading, the main principle, of course, is to define a trend. With the chart, you can see which party is stronger, the bear or the bulls. And the bears are speculating on the falling price and bulls on the rising prices. But you have also sideways trading ranges. The left one is with higher highs and higher lows, uptrend, and of course a trading range. This is very nicely defined, and there you see the tops are on the same level as well as the bottoms on the same level. The downtrend, of course, lower lows, lower highs, and the impulsive moves are to the downside. Anyway, if you focus on the market, it's very important to focus on the right thing. And here you see a photographer of a fireman, and I borrowed this picture from my estimated colleague Harry Clip, also a very good seasoned trader. It says also, take a look where the action is. So instead of taking pictures end of the firing house, you have to extinct the fire. The other one is expect the unexpected. This is very important as well. This kind of DAF, or what is it, Trabant, taking over, kind of Lamborghini or somewhat. I don't know which car it is. Actually, this is a Dutch. No, this is not England, where they drive on the left side, actually. But also the last weeks, last days and last hours show that always expect the unexpected in the market. And it's very important to put yourself first, of course, the targets and also the scenarios to buy, to sell, but also to put the stop loss levels and take profits. With Coinflex, you can do that as well with bracket trading. I will show you in a minute. And first of all, how to define a trend. I said with before that we use naked charts, but I also would like to refer to you to Ichimoku Cloud Indicator. And who knows the Ichimoku Cloud Indicator, who is working with it, I will give you a short overview about this indicator. And actually, Harry showed me this indicator a couple of years ago, and I thought, no, Harry, not again, one indicator more. But it was very interesting to take a look at, because this indicator says, it tells all. You have, of course, the chart, and the chart is the green one and the red bars in the middle. As you can see in the middle of this the screen, there is a yellow cloud. This is a Kumo, and in general, it says when the price is above the clouds, the price is tendency is upwards. So it's an uptrend, and a cloud above the price, that is more a downtrend, with the cloud as a boundary to the upside. So it's a resistance area. Is this picture clear? Actually, I will show you, of course. I'll explain you the individual items. The thing is that Ichimoku Cloud Indicator says that is one glance, one chart in a glance, everything. What you can do is you, of course, you see the price of now. You see in front of the forward, you see where the potential resistance areas and support areas are. And of course, the lagging indicator, which I don't use too much, shows that if the market is trending upwards and downwards. But for me, it's more important that the two moving averages. And as you can see, for instance, the red line, that is kind of moving average of 9 days, but it's moving average a little bit smoothed out, and it's a moving average of 9 days between the highs and the lows, the average of the 9-day high low. And the green one, so that's the red one is the Tenkan line, and the green one, the Kijun line, is 26 days, and it's a little bit lagging, and it's a little bit farther away from the price, as you can see. The interesting thing is that this average between the red one and the green one, you project it forward, there is the upper boundary of the Kumo, of the clouds. And the lower one is the Senkou span B, that is 25 days moving average, and also projected forward. And this is actually the lower one, and that makes the clouds actually. So in future, here the price is somewhere, I cannot read the price well, but when the time develops, you will see the price tendency towards the Kumo. If so, then that is quite good support area. The interesting part is when to enter the market, when to exit. For instance, for the buy signal, you have the TK crossover, the golden cross. That is the red above the green one. It starts in the middle here, and I think it's more or less 450. I don't know which one is Apple. A couple of time ago, and it went through the roof to more than 550. And the other one is that you can use the green one, the Kijun line, as a kind of take profit or stop loss. In the other way around, when the red one, the Tenkan line, crosses the green one, the Kijun line, the TK crossover death cross, then you have a sell signal. So in short, a price above the Kumo, that is bullish, and a price below the Kumo, below the cloud, is bearish. And actually, this indicator, you can use it on the weekly basis, the daily, the hourly, every time frame actually. And for Coinflex, I would like to zoom in a little bit smaller time frame, for instance, on 15 minutes, to have a little bit more action, on even maybe 5 minutes. This seminar, webinar, I gave one time for stock traders, for day traders, and the best setup for day trading with Ichimoku Cloud, they said that a 5-minute bar would be very great for day trading. Also for Bitcoin can be well. And for daily, weekly, or swing trading, preferably longer term. So for longer term trading positions. The best setups, I would like to point out the second one is price crosses the clouds. That means if I go back, the price crosses the clouds. So that means that if the price breaks above the cloud again, that means that the turbulence area has been left. Badr asks, yeah, how about 30-minute trading as well? That is also good. I think 5, 15 or 30 minutes is the same, but we will dive into that with the Coinflex soon. And the other setup, that is if the price moves inside the cloud and then breaks out, of course, then you get an extra momentum break. And what I said before, the TK crossovers, Tenkan, the shorter term above the or below the Kinshasa, the smaller, the lagging one. So it's golden cross for buying signals and death cross for sell signals. And the strategy works best in training markets, of course, because in non-training markets, not good to. It's very hard to make money, or you have to be an option trader. Then you can sell some premium. But yeah, where to put entry, where to put a stop loss, and where to take profits. I would like to do a short one. Actually, I will move this PDF later on in the chat on Telegram, and also I will send it to you guys via email. But how do you determine the entry and the exit? Yeah, the entry, of course, that is the TK crossover when there is a crossing, and then the entry, you can say, okay, 50% of stop distance. That is step 1. Step 2 is 100% of the stop distance beforehand. You can take a look at, but the other one is the exit. Target 1. I said it, excuse me, I read it different. The target 1, so when you have a position, the target 1 would be the entry price plus 50% of the stop distance. So if you are long, for instance, in Bitcoin on 6,000 and you have a stop loss of 100, then the first entry, the first exit will be 50 points. The second exit, I will put it later on clearer. The exit would be then the entry point plus more or less 100% of the stop distance, 100 points, 60, 100. And then the target 3 and 4 are more armchair affairs, or sofa affairs, because then you can lean backwards. For instance, this chart here, you see a little bit not that clear maybe, but here's Bitcoin US dollars. It was a couple of time ago, around 7,600-ish. There you see, of course, the break above the target 1 hit. You see the break below the clouds, and then you see the price dropping like hell and stabilizing again. But the target 1, 2, 3, and 4 were hit very very quickly. So short, there was BTC USD dollars. BTC in dollars was 7,920, 60 point stop loss. It's very low, of course, but the stop would be at 80, 79.80, and the target would be the 50% of the 60 points at 30, 7,890. 60 points from the 7,920 would be 7,860, and the next one would be on a 50%, so 90 points, and the other one another 30 points extra. So there you can see that you have to move and position yourself in training markets. That is very important. I'll show you in a minute how to do that. That in general, I would like to dive into the buy and sell moments. It's very important that you have a sound trading system yourself, gut feeling, maybe flip coins, I don't know, whatever your criteria is. It's very important that you stick to that, and then to go long or short. And then if you have the price, if you analyze the market well and you have a position, check the support resistance areas, check Fibonacci retracement levels if you would like to. Moving averages can help, but also triangles, patterns. But in this very short-term trading with Coinflex, I'm not using that too much. For the longer term, yes. First question, does someone has a defined trading plan for himself or herself? And who sticks to that? For instance, what is an entry rule for yourself? Question one, entry rule, but also the second one, what is the exit rule for yourself? Okay, I see you guys typing. Okay, very great. Okay, so John says moving average cross exit 20 to 30 ticks. Okay, and which crosses do you use? Is it, for instance, 815 or 821? 821 is, for instance, Fibonacci levels, or Fibonacci numbers. Exit 20 to 30 ticks. Okay, that's very interesting. And of the 20, 30 ticks, what is your stop loss level actually, John? Is it also 20 to 30 ticks, or is it lower? Or wider, of course, it's possible. I can imagine actually that with moving averages crossings, that that moving averages, the signal to buy, to sell, you see later. So most of the time you're late or later in the market. Okay. John 10 says, okay, stop loss level is the same, 1-to-1 ratio. Okay, fair enough. Great. I would like to guide you to the platform of Coinflex. And after that, I would like to give you some steps for successful trading as well, finally. Actually, Kenny Shi is the man. He's the Coinflex man. And he's very nice tutorials how to trade on Coinflex. And also on YouTube, I think of Coinflex, you can find some tutorials. And of course, feel free to interrupt me later on as well. And Butter says 15 minutes, anti-Bollinger at bottom, moving average cross stop loss. Okay, interesting. One point I would like to make, Butter, if the entry on the Bollinger Band when the market is dropping, are using then a moving average when it's turning to the upside, and then you are going long, or if the price will touch the Bollinger Band at the lower end. Because what we have seen lately, of course, that when the Bollinger Band has been touched at the bottom, it crashed like crazy. So the Bollinger Band can help because then you see the market widening too much and reverse to the mean, that it can or should correct again, but you see also free fall. That's a point. So if you don't have an extra filter for that, then it's a little bit tricky. But I can imagine if you add the moving average crossover, it's good. Okay. Thank you very much for your input, guys and ladies. If I'm right, do you see here actually my screen with Coinflex? And are the charts clear? Okay, I would like to show you this Coinflex account you can very easily open. And I think I think it's very easy to open an account and to put some coins on that. I would like to put here again the link in case you don't have that yet. And within a couple of minutes, 3 minutes even, you can trade. My suggestion is not to put too much in the beginning, and just to test and to try out the platform. And also, if it's going well, you can also move further on, and don't overstretch yourself too much with leverage. This is actually Trade Technologies environment, and I've been working as a trader as well with TT, and I was very happy with the system because we're spread trading and buy one product and sell the other one, and on another market as well. And it's very click and go. It's very easy. However, you have to get used to it. On the left top, you see the XBT USDT March futures, so the Bitcoin futures. And the last trade I see here, for instance, the March futures, 5,225. And you see here the, the market moving. Last trade 40.50. And in the middle, you see the bids and asks. And you see the spread is quite wide. I'm not that fond of it because, like, yeah, it's trading like crazy. First of all, I would like to point out, show you a chart here about on the time frame. Here you see the intervals. For instance, this is 15 minutes candle. You can zoom in, zoom out. Actually, the indicator, it's easy to put it with the technical indicators, and there you can find, for instance, Ichimoku cloud with an eye here. I did it already for you. And what you see here, actually, what is on the 15-minute level, what is the trend? It's clearly downwards. However, stabilizing now, and at today at 3 o'clock, it jumped from the 3,600 level, more or less, to the upside. So the break, as I told you, I don't know how to zoom in, but the first one is here on 8,000 when it broke below the clouds. There you see the cloud is hanging above the market, and is acting like a resistance area, like a shadow, a dark cloud. And you see it as well. Market did not recover again above this level. Only after hitting a low of 3,600, now 4,800, then it broke to the upside again. I told you about the TK crossover. Here, the blue one is very close to the price. So this is the Tenkan, the T, the very shorter term, and the red one is the lagging, and that is the Kinjitsu. So I said also, when you have a crossover, the blue above the red one, in this case, you have a buying entry at 4,808, and you can see the market rose again, and above the cloud you got accelerating move of more than 1,000 points, and went to 5,800, even 6K I've seen. This is a chart of now this is a chart of 15 minutes. If we define now the market, it is on the 15 minutes is bullish, flat to bullish, but you see that the cloud, the Kumo, is below the price. That means that we can expect between 4,800 5,000 support level in the future. The green cloud, there is that trend is a little bit stronger, and the red one is actually a bear market, and we are now entering a bull market for the 15 minutes level time frame, as you can see. But I honestly don't take too much care of the bull or bear market in the Kumo. For me, it's more important how the lines are sloping, and these are sloping upwards, so we can expect some upside potential. The disadvantage of moving averages, you can see here the T, that thinks, and the blue one is above the red one. We are about to enter a sell above the Kumo, and a sell signal above the clouds. That is a little bit neutral, is not that strong, but it's a first indication that the market will go lower. And what the theory says also, when the market will break again or further, moving towards the cloud, and also breaking downwards the clouds, then we have a more defined downtrend again. So in short, 4,800, we are long. Actually, I don't have position now. It was too tricky to leave open positions. Here you see the crossover to the upside, a break above the Kumo, and a rally towards more than I think 6,000 almost. I told you that you can also put the stop loss above the red one as a line, and it broke 5,400. So you could have picked up 600 points more or less. But that means that this is a weak signal on the short side, short term, on the 15 minutes. Let's take a look for the 30 minutes, Butter. I presume that you are trading on the 30 minutes level, one time frame higher, and you can see that the charts are very quick, and now they are into the turbulence zone. The price is not really clear, so I would not try to pick on this time frame the coins up at this moment. However, you see the Kumo is now on the lower end, is 4,800, and I told before that was a buy signal before. Now it is support area. I think it's more coincidence actually. But here you see that yeah, selling pressure is all over the place. If I step back to the 5 minutes level time frame, it's a little bit other question. Now we are short. Look, what we are experiencing now is that there's a sell signal, albeit a little bit weak, above the Kumo around 5,500. Now it broke to the downside below the Kumo. So what we can do, we put the sell order very quickly. 5,000 is dropping like hell now. I have to take a look. Where is my ladder? Yeah, I want to see the prices. You see 60 points in one time, you see 50, 40. Actually, the price is on the 5 minutes basis lower. I put a sell order. Actually, this is very small, a lot size 0.001, just to show you. And I have to say that the market is quite big. The spread is quite big. 20 points is too big, but you can also cancel very quickly the price. But actually, you see that the market wants to drop. Okay, I missed it. So in theory, it's nice, but I told that 500 is dropping. Yeah. Okay. I put a bracket order. I'm short, and let's take a look. Flat again means I think I've been stopped out. Okay. That means that the system is working very well. Actually, you see that the market is quite, not that liquid at this moment. Yeah, it's liquid, but the spreads are wide, so you can be wiped out very easily. But if you would like to take a look at the sell opportunities are on the downside, instead of the bracket, you can also put simple limit order. The ask is 5.0. Okay. Yeah, I missed it. Around 5,000. So you have to be very quick as well. Okay. This is one. In short, there was a fill actually. 81. The market is now 83, 90. So the market is quite active. But as you can see, my lot was last traded. So we have the low. Market is also dropping in stock market again. My colleague says. So the bid is now 5,000. Yeah, it's now trading to the upside again a little bit. A small position. But as you can see here, when you're trading on the charts, the selling pressure is still there. However, it doesn't mean that the market cannot move again to the upside. Would like to put in an extra sell. Did not hit. And I would like to put buy limit again. 76. Okay. Second one. It's just to show you some. I'm more or less at 5,000 short. It's now going to the upside again a little bit. But you can see how quick the market is trading. Just to take a look for you to show you how you can trade. But I prefer to do that via bracket orders in a better market. Yeah. So I'm now 50 points. Yeah, I've 50 points, a little bit more or less in the minus. That is just to show you. And I will also show you the other one with the bracket order again. Brackets. Most of the time when the market is like this volatile, you get a hit, then it's wrong. Someone has questions about this trading platform. And maybe, Kenny, feel free to share your Telegram group of Coinflex as well for the people. Okay, great. Actually, so we got also the opportunity to do a live trading competition, and there are time windows of, for instance, 30 minutes or 20 minutes. 30 minutes or 1 hour, and I would like to do a kind of beta testing first with real prices. So it's a real account, also with real prices, and someone who would like to take a look at to trade with us and to try, then it's good. And it's a kind of it's a kind of like poker. You have a buy-in, and then with the buy-in, for instance, each is putting $50 or 10 bucks, and there are 10 people in the room. Then we have $100 to share. Maybe I can also talk with the guys from Coinflex to give some flexes away, maybe. But this is to be discussed. But first of all, I would like to help you with onboard and also to trade real life. Anyway, if you have some questions, feel free to share that with me. Good for now. Yeah. Okay. Very nice. Someone else? And of course, at Crypto Academy, you can find more information. Yeah, I hope that this session was useful, and later on again, we would like to give more presentations like this, tutorials, and also courses online. I'll scratch this one and this one. Okay. Yeah, it depends on which time frame you take a look at. It's dumping a little bit, but you see the market is quite broad here. It's quite wide. And would like to be out of position and to move on to the other one. Okay. Okay, I will move on to the final thoughts on the PowerPoint. If you see my PowerPoint again, thanks very much, everyone. So I would like to give you kind of overview, not overview, but some key points, 7 steps to for successful trading. And first is, of course, analyze the market you are trading. You can take a look at CoinMarket TradingView, and TradingView is also integrated in Coinflex. So that's nice in a TT environment. Do the trend analysis, and analysis can be on the Ichimoku cloud indicator or your own indicator like Bollinger Band, moving averages, whatever. And the entry moment, yeah, it could be the Ichimoku cloud breakout or the TK crossovers. And as I stated before, be careful with the cloud. When the cloud's up above the price, then the selling pressure, and to the downside, if the coin is on the below that, there's buying pressure. And very important, determine the support resistance areas. And then, of course, after entry, put stop loss and targets, as I mentioned before. And determine exit strategies. Of course, stop loss quick to break even. It's all theory, I know, guys, but do it in practice in real life. And evaluate the trade as well. It's very important. Okay, who would like to do the competition one time? I will set up soon as a tryout, and I will come up with you guys later with a small deposit, or maybe even free, depending on how we can arrange something. Somewhere next week in the afternoon. This was the best one. That's nice, Kenny. You can put a link also there, trading competition. But it's very important that people know and understand the trading environment, and that's why I need first some more practice with others as well. Thanks very much, everyone, for watching, and I wish you a very pleasant evening.